Good morning, ladies and gentlemen. Welcome to the video conference of SYN to discuss the results of the second quarter 2023. This video conference is being recorded and you can access the replay at the company's site, ri.syn.com.br. The presentation is available for download. We would like to inform that all the participants will be just watching the video conference during the presentation. And then we start the Q&A session when we give you further instructions. Before resuming, I'd like to use this opportunity to say that declarations are based on beliefs and suppositions of SYN and the information that the company has available. This declaration might bring risks and uncertainties, considers that they concern future events, they depend on circumstances that may or may not occur. Investors, analysts, and journalists may consider that events with the macroeconomic environment, segment, and other factors that make the results materially different from the ones expressed in the respective prospective declarations. Here present in this video conference, Mr. Thiago Muramatsu, President of SYN, and Mr. Hector Leitão, Financial Director of Investors Affairs of the company. Now I would like to pass the microphone to Mr. Muramatsu, who will start this presentation. Please, Thiago, the floor is yours. Good morning, everybody. I'd like to thank you so much for your attendance for this call. We are going to talk about the quarter and perspectives going for the second month, the second semester. And to start, I would like to talk about operational performance, that we are so pleased with the results. They are improving. We see in physical and financial occupancy, Hector will bring more the results, financial results, that they had a good performance in the second quarter. Start physical occupancy, we left 2188.4 to 2290.7, and this quarter we finalized in 91.9. And that is a relevant allocation in the third quarter at Grand Plaza. That was the full allocation of the commercial building. It's disoccupied in 2022. Now we finalize its occupation and it brings an impact that is relevant in physical occupation, improving it. Going to financial occupation, we had a growth, leaving 91, and now there is this growth of 1.4%, leaving 9.7 and reaching 92.1. This result is not considering this final allocation in July. Going to the next slide and detailing corporate buildings, we also had an increase in the physical and financial. So we finalized the quarter with occupation of 83.5 and 82 financial on AAA buildings CO that has an occupancy that is lower, but the market share in the financial result is less relevant when we compare it physical and financial. In AAA 83 and financial we are almost 90. Class A, that is more uniform. We have 3 buildings in Chácara Santo Antônio totally located, and the vacancy is a little bit higher in Brasília Machado and also in Suárez State. And talking about malls, especially in the financial occupancy, the weight is higher than the offices. Here we have some improvement when you see in the second semester 94.2, not considering It is also considering the building Glen Plaza. So now we are closer to 95% of physical occupation, and financial 93%. That is going to increase because of this occupation. Malls, still malls, the sales, the result was positive in sales, especially an outlook when we see IGPM inflation negative in the last 12 months. We live and we see the contribution to grow 7.3%, part of it 3.3%, the same store sales, representing 20 million. Replacing, we have been doing, and this increased 21 million in this quarter sales. We have been investing in kiosk and events, and this added the second quarter last year, plus 8 million. So this quarter, 750 million sales, growing 7.3% based on last year. That is the actual growth. In the same stores, we closed the quarter 3.3%. Underneath the previous quarters, and I believe that the previous quarter, the previous year, that the important impact was arrest of pandemic effect in the final quarter of 22, 23, and the slowdown of inflation that contributed for lower results on sales of stores. And renting of the stores, we keep the number that is high, closing in 8.1% of growth in the renting of the stores. Financial performance, I pass the microphone to Hector. Thank you so much. Thank you for the attendance, Eric. Financial performance. When we see properties, we had a growth of 9% in NOI consolidated in the quarter, and we closed the semester with 8% of growth. That is really concentrated in top line revenue. And then we had a good evolution in the last years on costs. And now the highest contribution in results is really renting in the properties. Shopping mall, the growth is 11%, very robust. We closed the quarter in 40 million NOI, compared 36 the previous year. And in the semester, 79.8, considering recovery of default, and 70 million the previous year, growth of 13.7%. We are so pleased with this result, considering that great part of the rents are adjusted by the IGPM. That is negative. The actual growth is robust, and it pleases us that the strategy is correct. Offices, we have the growth in the quarter of 5.8%, 8 million and a half on result, and in the semester, a drop of 7%, closing 16 million NOI on offices per semester. And I commented last quarter that was the linear effect on Berman 10, excluding this effect, that is the growth of 3% positive compared to negative IGPM, that is the base for most of the contracts. Following the analysis, adjusted EBITDA, operational result, adding services, expenses, and office, it is 14% growth, explained by the performance of the assets. Nothing new about expenses and other results on services. And here the robust growth is the consequence of asset performance. When we see the semester, We are flat compared to the previous year, and that is an impact that I commented last quarter. The first quarter 22, we had a reversion of bonus payment at the company. If I exclude this effect, we have a growth of 11% EBITDA positive. Financial result, that was the leverage of result on the result improvement year over year. There is a drop of financial result net 44%. We improved. We were in net expenses 38 million, now it's 21. And then we have some factors, important factors to comment. The first one is our deceleration strategy, paying gross debt, and then you have the cost of payment and what you pay on debts. This strategy, the result, Selic is a little bit over. And then we had also a positive effect on IPCA, slowing down. Great part of our debt is IPCA. We're going to see the numbers later. This helped to bring the cost down. And also financial revenue that is better, even with the cash reduced. We had some good performance of applications. And observing the semester, a drop of 30%, closing with net expenses of 51.8 million compared 72 the previous year. Following up, net profit, observing, adding up all the variations, we have an improvement, expressive improvement. Net profit adjusted almost 3 million in the quarter, compared a loss of 15 of the previous year quarter, and a loss of 6.4 in the semester, compared to 20 million loss in the previous semester. When we see FFO adjusted, excluding depreciation effect and the cash effect, we close the quarter and the semester with cash generation 12 million compared 6 million of negative FFO, 6.6 final quarter and 2.9 previous semester. So briefing up, operational is doing well. We have robust growth in the assets, especially shopping malls, with a good recovery since last year. The strategy and the expenses are well controlled, fixed expenses of the company, and the financial result improves based on the strategy of debt payment that is accelerated that we had last year. But interest rate drop, we are seeing in the Selic rate. The perspective is very positive for the following quarters as well. Following up, debt. We closed the quarter with 292 million and gross debt 1 billion, a reduction of over 230 million compared to the last quarter. Net debt 784 million. When we see the leverage, there was an improvement 6 times to 5.87 times in this quarter, especially because the adjusted EBITDA of the last 12 months, we see EBITDA rate better, growing every quarter. So we are going to see this leverage reduction in the following quarters as well. When we see financial covenants, IFRS vision, there was a good improvement, 5.3 to 5.16, and we have room for more leverage, 7 times. And another important covenant and corporative, that we have room 2 times, and the obligations, we are comfortable. And finally, the final slide, showing amortization. We pay the debts with shorter term. We elongated the debt. In the next 1 year and a half and 18 months, we have a small amortization. That's with amortization that are monthly. We do not have obligations in the following months. In 2025, we are going to have 200 million of amortization. The debt profile, 35% is IPCA and the rest is CDI. So here justifying that IPCA is slowing down, and it's important, answering for part of the drop in the debt cost of financial expenses. And the average cost, IPCA debt, 6 and CDI, the average spread is 1.5. That is very low, considering the macro outlook. So the equation is doing well with the profile of that. The financial part is over here. Now we are going to start the Q&A session for investors and analysts. If you wish to place a question, please raise your hand. If your question is answered, you can leave the queue and lower your hand. If you want to place your written question, you can write it down in Q&A box with your name and company's name. Please wait, we are collecting the questions. Our first question is written by Mr. Fernando Teles. Congratulations on the results. The company SYN, Gestão de Recursos Limitada, is part of the societary structure of the company. What is the ratio of the market share? And there is one more question. If I may ask another question, what about the results of Barra Metropolitano Mall, especially on sales, renting, and vacancy? Thank you so much. Good morning, Fernando. How are you? The first question that you asked about SPX, yes. Honestly, I do not know if this is the name of the company, but we have a society of 50-50 of a manager real estate. So we have two funds. We have some information about the performance of these two funds and our participation, but our societary participation is in the holding, that is the managing holding. I do not know if I have answered your question. Anything you can complement later. And about the Metropolitano Barra Mall, this mall is growing a lot in the last years, especially after 2019 onwards. There was a drop in 2020, but since then we are recovering well. It's growing a lot. Just to give you a perspective about the sales we have by the end of this first and second quarter, we have a growth of over 10% compared to the first semester last year. Our vacancy is low. We have less than 4% of vacancy, and result, we also are growing more than 10% compared last year. Is following the trend of the other malls. Thank you. If you want to place your question, you can raise your hand. If your question is answered, you leave your queue and lower your hand. If your question is in written, you can use Q&A box with your name and company's name. Please wait, we are collecting more questions. Next question is from Mr. Demian Baum. And he says, good morning. Have you considered the sales of any asset in the mall sector? Hi, Demian, how are you? I believe I have answered. We communicated and it was on the media. We had a process for a possible transaction with two malls Gran Plaza and Cidade de São Paulo. And we do it normally, talk about sales and acquisition in all the classes of assets that we have. So since 2019, we had some acquisitions and divestment as well. And I'm telling you that we have been working, trying to find the best opportunity. So if we find a good opportunity of sales, we maximize it. But if there is a good opportunity for acquisition as well, we are going to do it. So we try to be very pragmatic, always trying to observe good opportunities that come up and try to have an arbitrage of prices that we see in the private market, but not public market, between two players. Also, in the case talking about Bradesco transaction, the prices, sometimes we take prices like this and it was out in the media. That's why we communicated. There was no specific problem about that transaction. It was something that is a habit. Written questions, you can use the Q&A button, your name and your company name. Please wait. We are collecting more questions. Our next question is coming from Valdeir Batista from Centro Investimentos. And he says, good morning, I'm Valdeir. I'm an investor as an individual. And I would like to know your strategy to decrease the debt for 2025 once that the SYN cash is lower and lower. Valdeir, good morning. Thank you so much for the question. We have some choices for 2025. The first is that we can roll out this debt, take a finance to pay this obligation in 2025. It's always a choice and it's usual in the market. The second analysis is that we start generating cash, especially on Selic drop. The assets are growing double digit, and we are going to see a cutoff on the interest rate, bringing results. In the following months, we are going to assess, and it always depends on if you're going to re-leverage, it depends if you have new projects to invest, if you do not have it, what is the capital cost of the shareholders. Everything is part of the equation to decide if we are going to bring it up or down the leverage. But I believe the most important point, we have seen this decrease of balance in the cash is a rational choice. It's not a concern. This cash is really comfortable to work, considering that we have revenue and there is volatility, low volatility in the results. And you're going to generate more cash from these assets in the following years. Maybe the calculation, 300 million in cash is 200 million, but we have to remember there is a positive match starting today, this quarter. We see already a positive FFO, and we expect, it's not a guidance, but the interest rate dropping and the assets going well, we continue to see positive trend. Thank you so much. Next question is Mr. Reinaldo Verissimo, and he says, congratulations on the results. Lower Selic probably will revert the loss. Question, considering midterm interest rate, is there the possibility of follow-on? Hi, Renato, how are you? Thiago here. It's hard to tell you about follow-on. We believe we have a disconnection on what we believe is the value of the company versus the value of negotiation in the market. So the price is a new issuance that is very low. At this point, we do not see any possibility of follow-on. But then again, as I mentioned about the assets, we try to be opportunistic when we see a window. So we always follow, of course, the capital market. And if there is a good window indicating a good perspective on a good follow-on, we are going to do it, of course. And if you want to send your question, you can use the Q&A button. We are collecting more questions. Next question is from Mr. Carlos Herrera, Condor Insider. Good morning, everybody. Please, can you talk a little bit about the market point of view from July on and the first days of August? Can we have an expectation that the third quarter 23 is better than the second quarter 23? And the fourth quarter 23, according to the seasonality of the sector, is it going to improve? Based on it and the drop on the interest rate, do you expect back to profit in 2023? Thank you, Carlos, for your question. July and the beginning of August was very good. The second quarter, there is a slowdown, although 7% was a robust result, and why the double digit was worse than the first three. In the second quarter, it was robust. The third quarter is starting so well. The flow in the malls is increasing. The sales in July will grow 15%. So there is an acceleration compared to the second quarter. Same-store sale is double digit compared 3% that we presented. At least is what we saw in July. According to this data, we expect that the third quarter is good as well. Fourth quarter, you are right, the seasonality is interesting, especially because of Christmas. The end of the year is very good for malls. But the book profit anticipate this factor of seasonality with the linearization of rent. Normally you have double rent. Most of the stores, especially the satellite stores, they are linear throughout the year. So the cash result is stronger than the book profit when you see the seasonality of the final quarter. So we do not see increase on accounting results. Based on your second question, I believe 2023, we're going to have accounting results that is more limited. But of course, if you calculate our gross debt, that is more than 1 billion, every percentage point of Selic is representative in our result, and IPCA as well. And I believe we are going to follow a positive trend on growth on accounting results as well. If you want to place your questions, you can use Q&A button, your name and company's name. If you are going to open up the mic and speak, you raise your hand. Wait up, we are going to collect more questions. Q&A session is over. We would like to pass the floor to Mr. Thiago Murabatsu for his final considerations at the company. I believe that during the Q&A, we answered questions and we talked about it. We had a second quarter consider it as good quarter. And Hector said the first 40 days, the second semester, we see good news on sales and flow. We imagine that, of course, there was vacation period, but we are going to keep a good growth pace. And we are talking with possible new tenants, building commercial buildings and malls. And we feel that the second semester has good perspectives. I really hope that I'll get back 3 months from now with good news about the third quarter as we did for the second quarter. One more time, I'd like to thank you so much for your attendance at this call. And if you have comments or questions left, the RI team is at your service to help you out. Thank you so much. This video conference of SYN is closed. We thank you so much for your participation. Have you all a great afternoon.